is where that name is. Cholamandalam Investment and Finance Company declared numbers. Let's get in the management. They are joining us from Chennai on the phone line. If you could just take us through the numbers, loan growth was good. NIMs were slightly on the lower side. Any particular reason?
NIM was lower compared to Q4 because it was in Q4 we had certain amount of reversal of income reversals when NPAs came down drastically. This quarter we have held the NPAs at the same level as Q4 with very small in basis points levels movement. So we did not get the reversal of the income reversals that normally tends to add up to the yield. Apart from that, there has been a little bit of higher levels of securitization that happened in Q4. This also tends to eat out a little bit on the interest income because you need to knock out the lower bucket NPAs out of this income when you are declaring securitized income. So these were the reasons. These will come back in the coming quarters.
Right. Can you just tell us about the vehicle financing that continues to be the main growth driver and, one would say it's in a sweet spot?
Yes, it is in a sweet spot, especially for a company like Chola, where we are traditionally strong in the lights and mini lights. And these segments have started growing and we expect the growth to continue in the coming quarters. Considering the monsoons are good and the rural economy is picking up, we expect the vehicle finance to grow at a steady pace over the next few quarters.
Right. Can you just talk to us about vehicle financing and the competition over there? A lot of new companies coming in, a lot of high growth coming in over there. Overall, we are seeing, that a lot new products with lower margins are coming in. Is it getting slightly crowded?
See, vehicle finance, we have been there for quite some time. The main competitors for us are primarily the captives. As you know, many of the other players in the market currently are struggling with gross NPAs, which are much higher than what we are currently. So it will take a little bit more time for them to handle the gross NPAs and come on to growth side. We expect we could leverage the growth in the coming quarters much more stronger than many of the others in this arena. We also are expanding our network and we will see that the growth in branch network will be increasing in the coming quarters. So that would also help us reach out into much further into the tier 3 and tier 4 cities where the rural economy is expected to pick up thanks to the good monsoons.
Right. Can you talk to us about LAP and home equity business? It was probably one of the lowest profitability that we have seen in the last 5 years. Any particular reason? Yeah, the
LAP is currently going through a bit of a stress on the delinquency side, primarily because the cash flows of the SMEs have been on the downside over the last few quarters. This has increased the credit losses. However, as we are having almost less than 52-53% of LTVs and 90% of our portfolio is against self-occupied residential property, we are much more stronger and on the recovery front, and we expect that the recoveries on this will happen. We are in the 10th year of business and we haven't suffered any credit loss, crystallized credit loss on this portfolio so far, and we expect it to continue to maintain this trend of not having any crystallized losses in this book, and we are confident about it.
So, sir, you are purposefully shifting towards a low business model in the low risk model in this business.
Yes, we are already on the low risk model. See, currently what is happening is many of the new competitors are trying to increase LTVs and at a slightly higher yield. We do not want to increase the LTVs because we feel that the 50-52% LTV level is the safe zone to work in this particular product. So we are holding on to the 50-52% of LTV levels, and to that extent there could be some amount of yield sacrifice that we are going through in the current phase. And once the credit offtake picks up in the other areas, we will see many of the newcomers falling back to their traditional portfolios, and hence we are looking at it as a more temporary phenomena where we could come back with a higher yield on this.
Right. So as far as strong control over NPL is concerned, that is something which is the focus and that continues to be the main strength of Chola.
Correct. We are one of the best at the NPA levels. I do not have to say, many of you know the rest of the industry numbers out here. We are currently at around 3.5%, 3.6% on a 120 days basis, and many of the others are at a much higher level, even at a 150 days basis. So from that perspective, we are fairly in control, and we expect this to come down in the coming quarters further.
Right. So as far as provisioning is concerned, do you expect that to be at elevated level for some banks and some NBFCs? We have seen an increase. What's happening at your company?
See, we have already provided for the even to move towards the 90 DPD level. So we have already covered for the entire RBI regulation, which is to come into effect by March 18. If you recall, in March 2016 itself, we provided 54 crores towards moving to NPAs and 90 DPD NPAs. Though we are not declaring gross NPA number on a 90 DPD basis. So there will be no further hit on the P&L on account of incremental provisions towards moving to the next level. So from that angle, we are as good as it is all behind us now.
Right. Sir, just a word on the loan growth going ahead. What's the rate that you expect to maintain? 15 to 20% should be a good number.
See, we expect to grow at 15 to 20%. Of course, it also depends on what the industry is growing. Normally, we don't give any forward-looking statements. So, but I think that's a fair estimate.
Right, sir. Thank you so much for joining us and explaining about the numbers. The stock is up 2.5. The entire NBFC space has been on a roar, and this is no different, continuing to do very, very well at this moment. Let's just look at what's happening in the markets as well. So if I look at the Nifty.